My name is Rose Lumumba. I am a corporate governance specialist, actually a lawyer by training, but who has chosen to work on the corporate governance space because I thought corporate governance leadership is one of the most important aspects of good company leadership. So I work for the International Finance Corporation. I am the lead person for the Integrated Environmental, Social, and Corporate Governance Program for several countries in the Sub-Saharan Africa, including Kenya. Okay, so ESG is currently a very hot topic in the region based on the fact that regulators, companies, even investors are really focusing on ESG. Some countries in the region are ahead. For example, Kenya, they started, as I said in the program, they started their ESG or good governance practices in 2015 using the sustainable principles that were then issued in 2015. We also know that 2015 15-16 brought a very big phenomena in the world, the signing of the Paris Agreement. And many nations in the region signed into it, including Kenya, there's Rwanda. Actually, nearly all the nations in the region signed to it. And governments have taken several steps in implementing the requirements under the Paris Agreement. And so the region has made good steps. It is going forward. It's actually the Eastern African region is ahead of many other regions in the continent. And so I can say we are in a good space, but we still need lots of awareness raising of what it is. What does it mean? What do environmental issues mean? What are they? What are their parameters? How do we ingrain them in our day-to-day actions and leaderships in the company? What do social issues mean? Which ones should we consider? And of course, what about corporate governance? So there's a lot of awareness raising, both for the policymakers, the companies themselves, and of course us, the people who consume the products or who invest in the products that the companies issue. Today, we launched the SFI principles. Really, they updated. They were launched in 2015, but now we updated them from last year. We've been working on it for a year plus, and today we launched them. And several things happened in that revamping. Number one is the introduction of one new principle, principle number 6, about transparency and disclosure, which will guide banks on how to report on the various activities on environmental, social, and governance practices that they have adopted or integrated to their businesses. So that's one key thing. All the other principles were reviewed and revamped to include the latest provisions and requirements under the law. As we know, since 2015, of course, various laws have come into place on the environment, on the social substructure, on corporate governance, and we ensure that the banks are guided on how they can, fulfill the requirements of those laws. The other thing that is key in the updated principles was the fact that there are several standards which have been issued internationally and which affect our banks. For example, the latest standards to be issued was the IFRS 1 and 2, that now companies and countries are planning on how to implement. So we've taken, we reviewed the S1 and S2 provisions, and we have given guidance in the guidelines on how the banks can ingrain them. The other important thing that we spoke about, of course, was on corporate governance. The standard setter for corporate governance, the OECD, issued new corporate governance standards last year in December. So that was also included. And so really, apart from the new standard that was included, standard number 6, or principle number 6, the rest of the principles were revamped to just ensure that banks truly understand on how to absorb or how to use ESG in their day-to-day running of the banks. The standards are good because at least they set a foundation and a benchmark for everyone. So when we adopt the standards, and if we adopt it uniformly, then it will mean that everybody is considering the same things. Granted, what is material for one bank may not be material for another bank, but at least the standard makes us level. Yeah, so if we are measuring climate, what are we measuring, all of us? If we are, putting in our practices, good practices to ensure that we don't negatively affect the social substructure, what is that standard? So I must say that standards really are there as a guide and also as a foundation setter. The first thing I would advise banks is, number one, to be aware of what they are. So an awareness needs to be done on all the levels of leadership. Number one, the board needs to be aware of what the standards are. So training for the board, awareness raising for the board, middle management. And then after everybody is aware, the next step I would recommend is have policies around them. So organizational policy of what do we do as an organization? What is material to us? What's important to us? How do we report it? Who in the organization is going to action it? So that's the second level. And then, of course, the third level is implementation. So you've understood it, you've created the policies around it, now you're actioning. The fourth and most important is to report. Yeah? In corporate governance, we say whatever doesn't get measured doesn't get done. And even in life, what you don't measure, what you don't ask yourself, what did I do? You will never do it. So I encourage the banks to report on it, to look at what they have done, the impact of what they have done, and report it. And reporting is really important to many stakeholders. Of course, the first stakeholder is the owner of the bank, maybe the shareholders. We have the government, the issue of the license is a stakeholder, deposit and account holders are stakeholders. So Kenyans are stakeholders now, we have told the banks that we care about how they will be funding projects which are affecting us. So we are stakeholders. And so if banks do reports that address stakeholder concerns, I think they will be well on a good path to implementing good ESG.